Hey, Bulls and Bears, what is happening? It is Tuesday, February 28th, 2023, back with another dose of economic reality. And yes, the economic collapse is continuing to unfold, and it's becoming more and more apparent every day. So many things that we've been talking about that are going to happen or will happen are happening. Just our last report, we talked about the subprime auto lender that's basically folding, and that's just the tip of the iceberg. We're going to see a string of subprime automobile lenders fold, and that's usually where it starts in subprime. Remember, 2008 in the housing bubble, it started in subprime, then escalated from there. Also, falling rents. We're seeing rents fall much more quickly now than we did in previous winters, right? So rents usually go down every winter, but this last winter, this last 6 months, we've seen the declines accelerate. So rent is dropping. We're going to talk about that first. Then we're going to get into some other news. Bankruptcies increasing and a lot more. Let's go ahead and start right here. And this one comes out of the journal. Now, we've been tracking rents, and most of you probably know that rents have been falling significantly for the last several months. But Wall Street Journal now is reporting on this. Apartment rents fall as crush of supply hits the market. And I like the way they stated it here. Declines signal tenants may be maxed out on how much income they can devote to rents. And yes, it starts with rents, and we're going to see bigger declines in home prices also. People don't borrow money to pay their rent typically. Now, some people do crazy stuff like take credit card cash advances to pay the rent, but that's not going to last very long at the interest rate they charge on that. So it's not as distorted as the housing market where people can just borrow tons of money, go into tons of debt to buy things they can't afford. Rental is more based on how much you have at the end of the month. And if your income is not keeping up with inflation and everything else is eating up your monthly income, you have less to devote to rent. So that's what we're seeing happening. And that's why they're saying here tenants are maxed out or close to being maxed out, don't have the extra money. So what are they doing? A lot of people are moving at home. They're moving in with relatives, friends, roommates. Sadly, more people going into homelessness, going into shelters, uh, car life, van life. What do they call that? Yeah, van life when people's moving into their van, full time RVing people, right? So many different ways that people can go to as far as no longer having to pay rent or finding roommates in this case. Now, one of the interesting parts of this is that home prices are also coming down. A lot of people had the opinion that if rents are going to fall, it means that more people are going to move into homes or buy homes, and that's the only way that rents could fall. But now we're seeing both fall. We're seeing home prices fall and rents fall. By the way, home prices are still up nationally. They're still up year over year. And we were, I think, the only channel, one of the only channels that I know of that predicted that there would not be a housing crash, that there would be declining prices. There was one point where I didn't believe that the Fed was going to keep rates elevated. And I'm glad to say that they actually did. I just have my doubts when it comes to the Fed. But I've always said that if rates stay where they're at or go higher, we're going to continue to see declines in the housing market and declines in rents at the same time, right? So rents has to do with people have less money at the end of the month because of the difference between incomes and the cost of living. And of course, with higher mortgage rates and the way lending works, home prices coming down at the same time. The question is, where are all these people moving to? Well, we know that shelters are beyond full, and that homelessness is growing every couple months. We'll talk about homelessness, and every time we look at the surveys, it gets worse and worse and worse. Okay, now I've got some numbers here. As of January, rents were down 3.5% compared to August of 2022. So for the 6 months, down about 3.5%. That's pretty significant. And it's a much bigger drop than we saw over the last 5 years in the wintertime when rents typically go down. This was a much bigger drop. Now, what could stop rents from falling? Well, that would be more federal intervention. For example, on a federal level, there's talks of rent controls and price controls and all this intervention being discussed down from a federal level, coming down from the White House. So that could be disastrous for someone waiting for rents to go down. I hope that doesn't get passed. because that could really distort prices and prevent prices from becoming affordable for people. Now, we often talk about how there's new and creative ways for people to go out and buy a home. Here's a recent one right here. Just found this today. Amazon employees can now borrow against their company stock to buy homes. And this is through better.com. Better announced this program for Amazon employees to unlock equity with their company stock, allowing them to use stock as collateral for a down payment on a home. So pretty crazy that we're still finding these new ways to get people into homes when now is the worst time for people to borrow a home, to buy a home, or to borrow to buy a home. Obviously, if you're a cash buyer, it's not as risky because you have a lot of money if you're a cash buyer. But people that have to borrow money, not a good time to find a scheme just to get you into a house right now, just because homes are still unaffordable for most people. All right, so bottom line, unless they can bring down the cost of living or do a surprise interest rate cut, you're going to continue to see declining home prices and declining rents. Now, retailers are catering more towards the lower income people with more dollar stores popping up here. We have the store coming up in Riverside where I was at just a couple weeks ago. I did a video. One of the new stores opening is Five Below, Five Below. So everything is less than $5. Stores like Target are expanding their section that has $1 and $2 items. If you haven't noticed, I did notice that at my Target here. And take a look at this. We even have Target out there basically warning about dull 2023 profits because of heavy discounts are sapping margins. Also, it was just last week we had Home Depot and Walmart both basically lowering their forecast for profits this year because of the situation where so many consumers, most consumers living paycheck to paycheck, consumers getting closer and closer to the limits on their credit cards, more people every month not paying off their cards in full each month. So we are in this snowball right now. It's getting bigger. The dominoes are starting to fall, as we talked about in our last report, with the subprime lender going under. We're finally starting to see markets price in economic reality. As we reported earlier, the stock market now is in correction territory. Today, 3 or 4 indexes in the red today. Dow Jones down 232 points. S&P 500 down 12 points, which is 0.3%. NASDAQ down 0.1%. So things are starting to unfold here as we predicted many months ago. We've got oil coming back up close to $77 a barrel. I expect that to be $100 plus by this summer, and likely passing the highs from last summer, right? So inflation's here to stay. The cost of living, especially energy and food, are not going to give you much of a break. The breaks may show up in rents, housing, and the price of automobiles. But how many people are going to be able to afford a vehicle even if prices come down? Same thing with housing. Besides the super rich and the top 10%, how many people are going to be able to go out and buy a house at these high mortgage rates? All right, so as you might be able to hear, I'm a little bit under the weather today, a little bit of a throat issue here. So I'm going to sign off. I don't want to tear up my throat too bad. That way I can be back in 100% form to bring you tomorrow's update. So if you like these updates, if you like what we talk about, please give us a like and subscribe and come back and see us again. Big love. Bye for now. Keep stacking in peace.